Hello and welcome to ChartMill. In this video we take a look at some interesting trading candidates coming straight from our stock screener. I explain why these stocks were specifically selected for this watch list, and for some of them I briefly discuss a possible entry setup using our position sizing tool to mitigate the risk as much as possible. Just to be clear, this video is meant for information purposes only and should in no way be considered as investment advice. I do not currently have any shares in my own portfolio of any of the companies mentioned in this video. So, without further ado, let's check the charts. I'll start with the ticker AMGN. This ticker is selected today, July the 12th, using the ChartMill screen bull flags, which can be found through the section Trading Ideas. Via the button More Info, you can learn more about what the screen means and which specific filters are being used. If you click on the blue button here, you'll immediately get to see the complete list of stocks which meet the bull flag criteria. All stocks that meet the specified filters and for which ChartMill recognizes a bullish flag pattern are shown in the list. The software is even capable of displaying the pattern on the chart. It doesn't get much easier. At the top right, the filters are shown separately. In the stock screener, you can further fine-tune the selection by selecting other additional filters or changing existing filters. For example, if we want to modify the average volume from 500,000 to 1 million and only keep US stocks with a minimum price of $20, we can do so with just a few mouse clicks. The number of shares that comply with the newly set parameters changes simultaneously. With the adapted filters, of the 19,000 shares ChartMill has in its database, only 32 shares meet the specified criteria. After this initial selection by ChartMill, the number of available stocks has dropped so much that it requires much less work to further fine-tune this selection manually. Imagine for a moment that you have to do that first selection without the help of ChartMill. Using ChartMill will really save you a lot of time. On my screen I have both the daily and weekly chart visible. On the far right you can see the date on which the next quarterly results will be announced. On the daily chart, the bullish flag pattern is clearly visible. At the beginning of July, the stock price crossed a significant resistance at a $245 price level. The highest price was reached on the 6th of July. Since then we have seen a slight decline. If I draw a horizontal line over the highs from the end of April to mid-May, it forms a clear support zone. On the weekly chart, we can connect the same horizontal line with earlier price peaks, dating from mid-December 2019. This is a typical example of a price level that has served as a resistance area for some time now, but which may now become an important level of support to stop the current decline. Depending on which candle will be formed on Monday, this could become a nice long setup. After the market has closed down tomorrow, I am able to re-evaluate whether a long setup should be considered. Our next ticker is FB, Facebook. This ticker was selected by using the screen Strong Growth Stock Technical Setups. And just like the bull flag selection, you only have to click on the Run button, after which ChartMill will show you the selected candidates and the used basic filters, which can be further adjusted or extended. What I immediately noticed at FB is the current price action. The last few days the price has been moving within a very narrow range. The last 2 trading days were consecutive inside days, so the highest and lowest daily price is fully within the range of the previous trading day. I noticed also that the last 4 candles contain upper and lower tails. This too is an indication that something is about to happen to the price. Buyers and sellers keep each other in balance for the time being. Finally, it is worth mentioning that at the end of June, the price fell through the bottom of the current price range. But this turned out to be a false outbreak. The buyers entered the market almost immediately and brought the price to its current level very quickly. Nobody can predict which direction the price will eventually take. But this kind of pattern allows us to prepare a buy setup very precisely and with calculated risk. For illustration purposes only, I give you an example of a possible long setup using our ChartMill position sizing tool. Let's take the example where we want to go long when the price of Facebook breaks the high of the current price channel. We place a buy stop limit order that is slightly higher than the current high of the existing trading range. For FB, this means an entry price above $247.65. And for this example, I set the trigger price at $247.72 with a limit of $248. I also foresee a stop loss at market at the price level of $231.88. Depending on your way of trading, you can set the stop loss even shorter or further. By entering these data into the calculator, I can immediately see how many shares I am allowed to buy. In this case, the calculation is done for a portfolio of $15,000 and with a risk percentage of 1%. If you reduce or increase the risk percentage or your stop loss level, you'll notice that the outcome data will be adjusted immediately. More in-depth information about how to use our position sizing tool can be found in our documentation section. A quick tip: never risk more than 2% of your total portfolio per position. This means that if you are stopped out at your initial stop loss level, you will only lose a maximum of 2% of your total investment capital. Also keep in mind that the loss may still be higher if the stock opens below your stop loss level on the following trading day. Therefore, it is also important to take into account how large your total position in one stock is compared to your total portfolio. The last one is the ticker VEON, selected by using the screen horizontal basis using ChartMill channels. As the name suggests, ChartMill uses the screen to search for shares in a narrow horizontal trading range using ChartMill channels. More information about what ChartMill channels exactly are and how they differ from other known price channels can be found in this article. VEON is definitely a stock that is currently fluctuating in a narrow trading range. If the price were to rise above $1.85, we may get a test of the 200 daily moving average at the $2.1 price level. A buy setup at $1.86 with a stop loss at 1.74 means a risk per share of 12 cents. If we take the 200 daily moving average at $2.1 as our target, then this is exactly 24 cents or a reward to risk ratio of 2 to 1. With these data, the position sizing tool gives us the exact number of shares we are allowed to buy, again based on a capital of $15,000 and a risk percentage of only 1%. To be clear again, this is absolutely no advice to buy one of the stocks mentioned in this video. I just want to show you the power of our stock screening tool and the use of the built-in position sizing tool, which allows you to manage your risk in a proper way. Never forget that protecting your investment capital always comes first. Selection and timing are important parts of a successful strategy, but risk and trade management are at least as important. To improve your trading and risk management skills, we have several educational articles, videos and publications on trading and position sizing available in our documentation center. See you next time. Trade safe.